Well, we are 3 days until the Bitcoin halving, and these are the key levels to watch. Hey guys, it's Keith Allen, and yes, we've ripped the band-aid off of going live and just trying to be more efficient with time and get you guys a timely update. As you can see, actually, I guess you can see it better if I share the chart with you. Before I do that, just real quick, get through the housekeeping and let you know I'm not a financial advisor. I don't provide financial advice of any way, shape, or form. Nothing I say or share should be considered trading advice or investment advice. Do your own research, manage your risk. You know what the deal is, right? You're responsible for your own trades. Okay. So, what's the topic today? The halving is rapidly approaching, and we have got a lot of action concentrated into a very tight area in the charts. So, let me go ahead and share the screen, and we will dive right into it. On the candle chart, we'll start with let me see if I got the right one here. Here we go. On the candle chart, we'll start with, you can see that, all of the drama really concentrated into a tight area. Heavy resistance above. This is the trend line. We made a series of higher lows, higher lows, higher lows, and then boom, things broke through over the weekend after some geopolitical tension. And we marked a double bottom here, and now in jeopardy of, I don't know if it's jeopardy, but potentially a triple bottom here on the daily time frame in near range time horizon, I guess I should say. And then, what about a potential breakout from here? Back up above this range, you see strong technical resistance from the trend line, the 50-day moving average, and the 21-day moving average. So this is very, very strong here. Of course, we have also had a lot of resistance at that 69K level, the 2021 top, which has been so hard for us to penetrate and stay above. And then, we did manage to make one new all-time high, which certainly changes the dynamic of things in both in terms of how far we could go if things break down and what it's going to take to break back above this. So on the liquidity front, we often look at fire charts, and the first thing that I'm noticing here is we're seeing this range of bid interest develop. Okay, I've shown you many times that just historically we really need to see brighter areas of liquidity to let me refresh the screen real quick, that we need to see brighter areas of liquidity. The brightness is representative of the volume, right? So if we look at the 3-year chart, we can see that historically it has taken a lot more liquidity than we see concentrated in the area here to form the foundation for a bounce. Okay, and this goes in both directions, right? The bright spot wins. Okay, price is initially attracted to it, and then it gets rejected. So at this stage, in terms of where the concentrated liquidity is, we've got a significant amount overhead above the 70K range, and we start seeing things build here. We've been in this 60K range for a while, but we had a little bit more back in March, and now we see this developing, and the depth here is good to see, right? You want something to backstop things. Liquidity dampens volatility. So at the moment, if we also say that liquidity equals sentiment, because let's face it, right? If there's sentiment, they put their money there. If there's no sentiment, there's no money there. So, when we talk about the breakdown ranges, nothing influences sentiment like price, right? So we just recently saw bids, stacking more into this range since price broke down here over the weekend. And if things went further, then I imagine things would ladder down. But for right now, there is no sentiment for sub 50K. There's really not much sentiment for 50K. This is even above 52K, which is, an area that we've looked at on the chart here as a potential downside move if things break down from this lower low at 59K. We had a little bit of consolidation in this range, and that has yet to be retested. And quite frankly, the fact that we've made these moves without any retest, without any pullback whatsoever, is an indication that there is reason, doesn't mean it has to happen, but there's a valid reason for price to come back down and correct and retest these ranges if sentiment moves in that direction. What could be a catalyst? Sure. We know there's, geopolitical tension has just been ramping up around the world for years at this point. First, obviously, the Russia-Ukraine situation, tension between China and Russia and U.S., of course, the Middle East and the U.S., that tension's always been there. But most recently, we have the conflict in Israel and the Middle East that is now, spreading, or at least did over the weekend with some direct action from Iran. And that's not what anybody in the world really wants to see. I'm not going to get into a political debate here, but nonetheless, it does have an impact on the market. And that, I think, was a catalyst for this move, but quickly recovered. Now, it recovered and then it dumped again. And as you can see, price coming back down here, potentially to go retest a triple bottom. So let's go back to liquidity on the chart, on fire charts, and zoom in a little tighter here and see if we can see what's happening. And here you can see that we do have a nice concentration of bids in this 58 to 60K range, about 61 and a quarter, and some depth below it. Now, in the near range, this is happening right here, right? We have some liquidity overhead that's suppressing price, pushing it down. And if we look at the daily chart, we can see it. Roughly, most classes are selling a bit. You can see that this resistance came in overhead and served as a suppressor to push price down. It's like these guys are trying to get filled down here in this range. And, well, I'd be happy with that personally. I don't know about you. So you can't really get a lot in terms of trend off of the daily chart, other than the fact that purple whales have been the most dominant class throughout the history of this game that we've been watching here on fire charts. So I do watch them very, very closely, but it's also worth noting that whales, brown whales, purple whales, can disguise themselves as any of these smaller classes, and they often do, and then sometimes they need to, just because there's not enough liquidity in the books to sustain those larger orders without slippage. Well, in this instance, we do have a bit of liquidity in the order book, not a ton here in this near range. So it's reasonable to think that we could go back down and retest this range right here. Let me open back up a bit to a little higher time frame so we can get some perspective. I think that's always important to do, right? And as you can see, we have revisited this range quite a few times here. What we need to see is more bid liquidity coming into this range to challenge what we have up here. We're still a bit outclassed on the upside in terms of ask liquidity, which is resistance, versus bid liquidity, which is obviously serving as support here. So want to see more come into this range, brighter spots, if you will, right? This is the fire chart. It's all kind of the color temperature of fire, and we look for those hotter spots. See this white spot right here? That is representative on this particular chart of about $59 million. So we don't have that in this active trading range. The fact that we have a ladder here is good, and the fact that there's some depth to it is also good. But to really serve as a strong foundation for a strong move, we want to see more coming into this range right here, so we can have a stronger foundation to go back and retest these levels. 69K especially has been very, very difficult. And, at this point, we may even have a hard time getting to that because of the resistance, the technical resistance we see here in this range. So this is where our challenge lies above. And of course, it only gets heavier above this 2021 top at 69K. It gets even stronger up here, but this isn't even in the equation until we can break this range right here. Now, we have the halving coming up in a couple days, and conventional wisdom says, oh, we got a halving, price is going to go up from there. Well, eventually it should. At least historically, that's how things have worked. But there are no straight lines in this game, and the halving is certainly no different. In fact, we have quite a bit of history of corrections during halvings, and significant ones, including those happening right around the actual halving event itself. So be prepared for that. And the fact that we're sitting here now, after a decent dump on Saturday, we still haven't seen that 20%, 30%, or 40% correction that many analysts, myself included, have been expecting. Doesn't mean we have to get it, but does mean that I stay prepared and vigilant, looking for that to happen, and I do conserve some dry powder for that event should that opportunity present itself. Here's another example, right? Just before the halving, we had a dump, and actually, excuse me, a downtrend after it before the recovery came, and we saw things moving up. And even in the bear market, right, there's still corrections, 34% here, 40% here. It can happen in a bull market. Excuse me, I think I said bear, but in a bull market, you can see that those corrections still can and do happen with regularity. So just be prepared for that. There are no straight lines in this game, and it's really coming down to what could wreck the most people, right? And I think a lot of people will be aping in, especially on these pullbacks at this time as we approach the halving, and expect things to go straight up, and they're going to get shaken out. So be careful with your leverage. You do not want to get liquidated, okay? And this is definitely going to, in my opinion, open the door to some volatility here in the coming weeks. So long term, my perspective is still bullish on Bitcoin, and I do think that eventually we will break our way back up in here. But we've got to break these moving averages first, right? The ones here in the daily time frame. We've got to get it back above this level first, and then, and only then, can we talk about consolidating up above this 69K level, which we've yet to do effectively. Then start working on the all-time high, and then hopefully work our way back into this trend line, and if not up in it, at least up against it, where we can see price continue to appreciate and grow. Whether we make it back into this long channel remains to be seen. Let me just zoom out a bit and give you some perspective of what that looks like on my chart. Anyways, lines are subjective. I tell you guys that all the time. This is my interpretation of a lifetime channel for Bitcoin. And I think that, we're on the cusp of breaking back in, but it's not going to be easy. Certainly not going to be easy. And if it does happen, then we have real opportunity for where I consider true price discovery when we get in here. Right now, our glass ceiling is obviously these prior levels. And then this trend line will be the glass ceiling once we make it above and challenge this all-time high. Don't think it's going to happen next week, right? I'd be very surprised if it happens in days, unless we see a big block of bid liquidity coming into this range that serves as a foundation to send things soaring up above. One more thing I want to look at real quick before we wrap it. I showed you this yesterday. It's one of the metrics in the MI dashboard that is bundled with Fire Charts 2.0, by the way. And this is the correlation between alts and Bitcoin. All right. And this has actually every alt on Binance. You can zoom in and see them all. But just to get an overview, what this is showing us is the correlation between the 14-day rolling correlation between Bitcoin across all pairs. And as you can see, we're heavily correlated here, upwards of 80% in a lot of cases here, right? The higher that is, the more likely we are to be printing and forming a bottom here, right? And if I zoom into this, you can see some of these areas, right? Look at the darkest blue or purplish areas here, right? Doesn't mean it's a straight line up from that. Obviously, it's not. It's just identifying a range of where the market seems to be searching for the bottom. And we seem to be entering one of those ranges right now as we're starting to get our first darker dots here. Let me zoom into that so you can see a little bit better and illustrate what that looks like. Okay, so historically, it's not the same every time. And again, this is not a straight line to up. This is merely showing you that the way the dynamic is in the market, that we have a high correlation here between the alts and Bitcoin, and that historically has led to marking local bottoms. Now, this could move from here, right? It could range down a few $1,000, right? And we have obviously identified those targets here in Fire Charts, right? There's room. This takes us down to 58K if we were to go right here, and quite frankly, if we lose that level, if we lose this 59.3, this 59.3, I think we really need to start talking about the likelihood of hitting this target down here in the 50 to 52K range. But as I said, at the moment, there's just not a ton of sentiment for that, which we can see by looking at the liquidity in the range. There's not a ton there at the moment. Let me refresh that screen for you again. Let me see. So there's not a ton here in 50 to 52. There's some obviously, and it's building, and that's what we're watching, right? We watch the order book is a living organic beast. So we're watching things develop. And here's a good example, right? There was some bid liquidity coming into this 56K level, and it moved down to the 53 level. That to me means that this particular entity has sentiment the price might go down a little further, and they'd like an opportunity to pick up a bid there if they do. Or perhaps they're trying to protect something. Nonetheless, this has moved down, but the fact that this is getting brighter is positive for bulls, anyways, right? It's going to be a battle either way. This is not going to be an easy climb back up to this level and to challenge the all-time high. First, we've got to get up back into these 70s here. So that's the outlook for today. Well, I will, of course, always be watching to see how things develop and change throughout the course of the day. And if I see any major developments, I will try and keep you guys tuned in. Hope that helps you out. Hope you like the analysis. And if you do, if you're new to the stream or you've been following along for a while, either way, I appreciate the comments and support you guys are showing me. Please smash all the buttons, share this thing, help me grow the channel. I really appreciate that. And I definitely love the comments. I engage with each and every one of them. With that, we're going to wrap it for the day, guys. As always, trade safe, my friends.